Chair, and congratulations to you, Secretary Yellen, on your new position. Good to see you again.
Good to see you.
My opening comment is just for you. I also have another duty here in Congress, which is to be the ranking member on small business. And during your opening statement, which I'm sure was written by your staff, you made some comments with regards to this administration being responsible for all the loans that are out there that are being taken by those entities, those small businesses under 20 or 10 employees. And I can quote you from my own press release as the ranking member of small business that the loans have been at roughly 75 to 80%, 10 employees or less already, and it's generally about a little over 90% of 20 employees or less. And for the administration to actually pause that ability of small businesses over 20 to have access to the program is actually harmful from the standpoint that if we don't pass the extension of the PPP bill that we passed in the House and the Senate now has it, if we don't pass that, those small businesses are actually at a disadvantage because the over 20 were delayed. And if they don't get their loan in the pipeline soon, the pipeline's not going to get processed and they won't even get their loan processed. So my comment would be, please tell your staff to quit politicizing your statement and please stop taking liberties with the facts. Mr. Powell, we're halfway through the 2-year cycle now on CECL and the capital delay, which will end in 2022 and begin the phase-in of deferred impacts on the capital. We've now had nearly 4 quarters of CECL data available and have banking agencies reviewing the data. Can you tell us what the Fed's review of that data is and if you would consider a more permanent calibration or revision to the current approach? And if you could unmute, that'd be great.
I once again double-clicked. So we're continuing to look at CECL, and I honestly don't have anything for you on that data. I will get a look at it quickly and come back to you.
Okay, that'd be great because I think having deferred it is something that you agreed to up front last year in the process. It was something that I think you probably agreed to again this time, and I think it's something we certainly need to review for sure, if not get rid of altogether. If a delay is something that we all believe was in the best interest of everybody affected by it. Also, Mr. Powell, from Chairman Powell, at this point, Fed data from third quarter 2020 indicates that 51% of the commercial real estate debt is now held by banks. And the FDIC data indicates community banks have a higher concentration of these loans than the lenders. At this point, again, Congress has provided relief from the financial institutions with these assets through the suspension of TDRs and the extension of the foreclosure moratorium. I think it's important we can have discussions around this and what will happen when this relief ends. Can you give us a little heads up as what you think will happen, the impact on balance sheets, the economic recovery, if we take that extension, we take that foreclosure moratorium off?
I will look into that for you. Sorry.
I apologize for my voice. I've got really bad allergies today, so
it's that time of year. No, so you're right. We're monitoring CRE very carefully, and you're absolutely right that its concentrations arise principally in smaller banks, and we'll have to monitor it carefully as we allow those moratoriums to elapse. And I don't have anything for you on that today, but we're well aware of the issue, and we'll be sure to move very, very carefully when we do address that.
Well, as you know, I'm very concerned about this situation because, as we saw in 08 and 09, when we went in and very punitively shut down entire industries, especially in the community, in commercial real estate and real estate development areas, it had a really, really devastating effect on not only local economies but the economy as a whole. So I hope we are very, very cautious about this. You and I have talked about this before with regards to forbearance and being able to allow these businesses to get back on their feet and see what the real loss is before we go in and sort of scorched earth, get rid of all these folks. But I appreciate your interest on that and your support on that. I know that you all are doing a good job of working with the banks at this point. And I would ask that you continue to do that. I realize some loans are bad. You got to write them off. That's fine. But I think if time is given with the nature of the economy the way it is, I believe we can get out a lot of the mess that we're in without having to go through the process of foreclosure. So I thank you for your thoughtfulness, and I yield back, Madam Chair.
Shepard Smith here. Thanks for watching CNBC on YouTube.